Hello and welcome back to your South King County Real Estate Update. My name is Sarah Eggleston with Stone Egg Realty, and I'm with John L. Scott. And I'm back to deliver your local real estate news for the week. I'll go ahead and jump right on into these slides. So today is August 12th, 2022, and let's find out what happened this week. We have a new class coming up, new strategies and tactics for home buyers in a changing market. The first half of 2022 is very different than the second half of 2022. So everything you knew about buying a house in 2022, that's all changed. So you sign up for this class if you are considering jumping into the home buying market, or if you've been struggling to succeed in the home buying market, or we're working on it last year, a couple of years ago, and kind of stepped to the sidelines. Now is a great time to jump back in. So sign up for this class. It's a really quick half-hour tactical session followed by a Q&A. And there are so many really cool ideas. Maybe I'm a nerd, but I think this is really, really cool stuff that you can do with the financing. And a lot of stuff is a win-win for buyer and seller. So you can really convince the seller to move forward and get your home at possibly a lower interest rate than the current interest rate. So make sure to sign up for this home buyer class. Like, if you want a 4% interest rate, sign up for this class. It's possible. So make sure to do that. And what happened this week? This week, I'm just going to drive home this class because this is super relevant, super important, and it is the best thing. So the thing that happened this week is this class was announced. This class is going to be so beneficial for I'm not going to give away too many secrets here. You got to sign up for the class, but there's really cool ways to lower your interest rate and get the seller to help out with that. The market has completely changed. There's way more inventory on the market. There's some homes sitting. So those homes that have been sitting, the sellers are often much more open to seller concessions, which means money back towards your closing costs at closing or towards your down payment. And yeah, I'm a nerd, but I really think this stuff is just super cool. So please sign up for the class. If you have a friend or a family member that is thinking about purchasing a home soon, please have them sign up for the class. The link will be in the description just after this, and at the end of this show, the slides, it'll be up on the slides as well. So I'll go ahead and jump back on into these slides so that we can get through today's material. So this one, housing shortage has spread across Pacific Northwest, new study shows. So this one, when I saw this title, I'm like, oh, cool, new study out about how pervasive the housing shortage is. Like I said, it's a brand new report. It comes from Up for Growth, which is out of Washington, D.C. They're a nonprofit research group that really works to increase affordable housing. In their report, 16 metro areas in Washington, Oregon, and Idaho, all of these 16 areas had a housing shortage in 2019. Wait, 2019? Yep, this report analyzes 2012 to 2019. So 2012 is kind of when we were rebounding from the housing crisis. There was a ton of homes. We were very overbuilt in 2000, leading into 2008, and then housing meltdown. So people stopped building houses. So in 2012 is kind of where I'm guessing they said the base was after that crash and start to recover. But then they came out and it's just to 2019. So I'm like, okay, this doesn't really tell us a whole lot about what's happening now. But it is super interesting to show Bend had the greatest difference. They started out with a surplus of 2.1, and now they have a shortage of 8.2% for their housing supply. But overall, we have such a huge housing shortage, and that's as of 2019. It's only worsened since then. So they do mention that the report captures the period before the pandemic, and if anything, the situation has probably gotten worse. So they do acknowledge that, but it was kind of funny to be like, wait, this report is for 2019? What happened in the last 2 years? As you can imagine, this scale of how short we are on housing is not easy to put a number to. It's a subjective number because maybe people have a place to live, but maybe they're living with their parents, or maybe there's 3 people living in a 1-bedroom apartment. Those things are taken into account here. So they're looking at housing that would allow people to move out of cramped living situations into their own space, as well as those that don't have housing or that are forced into rent. This one came out a few days ago. Seattle, Redmond, among the nation's highest rent communities. This is a Seattle Agent magazine, so not one I usually cover data from, but I did think this was interesting that Redmond nationally was number 8 for highest rent, with a monthly average rent of $4,222. Tacoma was 55 on the list, and Seattle was number 60. So I put the numbers down here with the population, average rent, and the year-over-year change. I don't know if anyone else out there is as shocked as I am that rent in Tacoma ranked higher than rent in Seattle. So now it is more expensive to rent in Tacoma on average than it is to rent in Seattle. That, I'm really having trouble wrapping my head around that. These numbers, because that to me is just so far out of what I expected. And Seattle and Everett are pretty much neck and neck, with only $10 difference in their average rent. So this is a national article, so please take this all with a grain of salt as far as our local news, but this topsy-turvy housing market has helped burned out buyers reset. First-time buyers represented 30% of the market share in June, and in 2021 on average, it was 34%. So we've come down 4% on average for the month of June from what our average was in 2021 for first-time home buyers. First-time home buyers are those people that have the hardest time generally affording a home because they haven't built equity in a previous home to use to purchase a new home. With the market shifting, higher mortgage rates, prices still increasing over what they were this time last year, it's been a really hard thing for buyers just to secure a home. The pandemic certainly made things way worse. Now we are having higher interest rates, and those higher interest rates are putting pressure on buyers. And a lot of areas in the country, there's still not enough homes for sale. Here we are headed much closer to our balanced market, which would be 4 to 6 months of inventory. We're still below 3 months of inventory. In this article, it talks about a nationwide months of inventory, and ours is below that. Buyers do need to know that the market is not as competitive now as it has been for the past couple of years. There's a lot of buyers that got burnt out and said, forget this. I guess buying a house is not for me. But now may be a great time to jump back in. Homes are sitting on the market longer, and a lot of sellers, if their home is sitting on the market a little bit longer, they're much more motivated to reduce the price, give cash back at closing towards the buyer's down payment, fix things, accept an offer with an inspection contingency. I know we didn't have those for a couple of years. Finance contingencies, all of it. So we are seeing a lot of price reductions as well. And this is nationwide. Like I said, this is a national article, but here in Seattle, we can echo these general trends as well. And we are seeing inventory pop up a little bit more, but there can be danger if you are waiting for a 2 to 3% interest rate. If you're sitting on the sidelines and waiting for rates to go back down, there could be danger in that as well, because we're still expecting prices to rise. So seller sentiments change. Buyer demand is slowing. Overall, there's a lot more sellers that are coming to the market. Some people were very tentative about selling during a pandemic. They didn't want people in their home, or the buyer market was too crazy and they didn't want to sell their house and not have something to buy. So there was a lot of stuff going on that prevented many sellers from even listing their home. Now those sellers are opening up and listing, and a lot of people wanted to do work on their house before they listed, and that work is done now. All sorts of reasons, but we are headed much closer to a balanced market. Nationally, there's 3 months supply of homes, up from 2.6 months of supply in May and 2.5 in June. Like I said, in Seattle here, our months of supply is a little bit lower. But a balanced market is generally between 4 to 6 months of supply. Buyers are burned out. So while those rising mortgage rates have added a little bit of a barrier to some buyers that are out there, there's not as many bidding wars. So if you pay 3% on a home that gets bid up crazy high above that list price, or you pay 5% on a home that sells below list price, there's a lot. The interest rate isn't the only factor here. It's important to look at the numbers for specific properties and see how it plays out. But there's a lot of buyers that are just traumatized. They lost out on a home. They toured a home. They fell in love with a home. They put an offer on a home, and then they lost it. And then they repeated that process a few times. And that is exhausting, mentally, emotionally exhausting to go through that process, especially multiple times. They were waiving inspections or doing pre-inspections before putting the offer in, so they didn't have to include that inspection contingency, or waiving financing. There are so many things that the buyers were doing to get their offer accepted. And you don't necessarily have to do those things anymore. Right now is a great time to reset. If you were shopping in the past, reach out again, either to me or the broker you were working with in the past, and we'll go ahead and go over the current numbers. Maybe right now is the right time to buy. And that brings us to our Market Stat Minute. We had 829 new listings in King County, 850 pending, and 605 sold in the last 7 days. Compared to the last couple weeks, we're pretty much remaining steady on listings sold, pending listings, and new listings. We're kind of staying the course right now. If we bring it to our local breakouts, Renton actually had more new listings than pendings in the last 7 days. Kent, Federal Way, and Auburn, that is not the same. They had fewer new listings than pendings, but it wasn't as big of a gap as we saw a month or so ago. So these are the Allen Pope charts. These are put out every month. The blue line is inventory, red is net pending sales. The top is for Auburn, Kent, Renton, and South Seattle, and we have West Seattle and Federal Way on the bottom. Inventory in 2018, 2019 outpaced net pending sales. Then the pandemic hit. There was this little blip on both areas where there were way fewer net pending sales as people were headed into the pandemic trying to figure things out. And then those sales jumped up, went way past our inventory, and that line stayed above our inventory line until very, very recently. But I wanted to put both of these up here because it shows how area specific these data points are. In Auburn, Kent, Renton, and South Seattle, the inventory compared to the net pending sales, that gap is much larger than it is in West Seattle and West Seattle to Federal Way. So West Seattle to Federal Way is generally experiencing a little more competition for each home that comes on the market than our Auburn, Kent, Renton, South Seattle areas. And last week, we had a weekly average mortgage rate of 4.99, tipping below 5% for the first time in a while. However, we have bumped back up to 5.22. Interest rates continue to be volatile. They vary daily, hourly even. They can be updated several times throughout the day. Last week, we did dip below 5% on the weekly average mortgage rate for the first time in a while, and that has reversed now. And if we bring it to today's interest rates, we are at 5.33. So we actually dipped down from 5.22. We dipped down below that and now have come back up to 5.33. And just another reminder, I'm going to get these Seahawks schedules mailed out in the next little bit here. So if you want one, please let me know how I can get it to you. And my last plug for this class, save your spot today. Spots are limited. If you can't make the class in person, I still encourage you to sign up. I will send out a replay of the event afterwards. If you go to my link tree, there's a link to sign up for the home buyer class there. If you're watching this on your computer, then you can scan the QR code here with your phone and it'll take you right to the registration page. But spots will probably fill up quickly. So please register today, save your spot. I just really can't wait to share this information. I don't know if you can tell how excited I am. Yeah, like I said, huge nerd. But this stuff is really cool and it can really just do wonders for buying a home for your future, financial, building equity, all of it. So make sure to sign up today. And there will not be a show next week. I will be out of town next Friday. I'm going to the Kite Festival down in Long Beach, Washington. So that is something that I went to as a kid. I'm really excited to see again. But there will be no show next week because I will be out of town. If you have any questions, please feel free to reach out. My phone number and email address are on the screen there. I would love to have a conversation with you about the real estate market in your area or an area you're interested in, or just make sure to go sign up for that class. And thank you so much for joining me. I will be back here in 2 weeks with your South King County real estate news. So I hope you have a fantastic week or two, and I will see you then. Have a good one.